You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That tune means it's time once again for Volatility Views, the premier program for volatility traders. And my name is Mark Longo from theoptionsinsider.com, as well as from, at least we like to think so, the ever-exciting Options Insider Radio Network. Quite a few programs for you guys to choose from. If you like vol, and I'm guessing you do, if you tune into this program, we do touch on it quite a bit on our option block programs. You may want to check that one out as well. And every now and then we delve into that. You might want to look for specific episodes of our Advisors Option or Options Bootcamp program. If you're more perhaps on the introductory portion of the curve, we'll walk you through a lot of these concepts we touch on here at length, but in a lot more detail, and explain them a lot more on a show like that. So if you're just coming to us first time saying, what is this VIX futures term structure thing they're talking about, things like that, programs like those may be good choices for you. Of course, you can find all that wherever you find. The easiest place to get all of our stuff, as always, subscribe to our network feed. You can get that in iTunes or TuneIn or Stitcher, wherever you go. If you want to mainline all of our audio, or at least you want to be able to pick and choose which shows you want as they come to you, bam, bam, bam. That's the easiest way to do that. Go find Options Insider Radio Network wherever you find your favorite programs, or of course you can just go subscribe to Vol Views in your outlet of choice as well. We won't dictate to you how you do, as long as you get the show and you like it. We don't mind how you consume it. Of course, you can always join us if you're available every Friday, noon Central, 1 p.m. Eastern. Except for next week, I should mention, by the way, next week is indeed the malaise, the post Thanksgiving tryptophan turkey / shopping extravaganza known as Black Friday here in the States. So we won't be doing a show next Friday. You guys will be out hunting for deals. No time to be listening to us. But we'll be back the week after that, so don't worry. But if you are here today, we'd love to see you. Noon Central, 1 p.m. Eastern via Mixlr, MIXLR. We always tweet out that link, so follow us there to keep an eye on that. And however, of course, you can always grab us as well via the app, also available in all the app stores. And however you listen to us, of course, hit us up. Questions, comments, insights, hilarity, pearls of wisdom, naughty jokes, all of the above. We welcome it all. Questions at theoptionsinsider.com. Probably the easiest way to hit us up for that. All right, and kicking us off, let's turn to, I don't know where anybody is today, so I guess we'll start with the meatball, because he's always somewhere weird. Maybe he's on horseback right now as he's joining us. Let's see. Let's welcome on the greasy meatball himself, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Greasy Meatball, where are you today? Was I right? Are you indeed on horseback?
No, I'm not on horseback. I'm in, although you might think I'm in the country, being in Riverside, Illinois.
I just lost a bet.
the best little small town in the world. But no, I'm coming to you from the suburbs of Chicago.
I think Uncle Mike Tusaw may take umbrage with that best little small town in the world in the hinterlands of Chicago. I think
St. Charles is way bigger than Riverside.
Riverside and St. Charles may have to duke it out.
Yeah, I don't know about that. Sitting here was listening to the thunder. We had a big bunch of thunder the other day, or just now, and it was really loud, and I thought we might get thunder snow because they're calling for snow, but not yet.
Well, it's beautiful downtown. Another reason why you should just live downtown. Beautiful, not thundering out, at least not yet. And at least no snow, at least I've seen so far. And yesterday, of course, almost 70 degrees in Chicago in November. We'll take it. We're the new Miami. So global warming, Chicago for the win there in that scenario. Let's also turn our attention. I know he's always traveling hither and yon. He's going to Asia soon. I don't think he's there yet for the big CBOE RMC event forthwith. So we'll be hearing about that in the next couple of weeks. I know he travels over to Oklahoma and Kamloops, the mecca of all things volatility. Let's see where he is today. Mr. Russell Rhodes, formerly corner office man, but he's man about town these days. Where are you today? Are you back in the proverbial corner office, sir?
I'm in the corner office, and I actually have a window that looks west, and I am predicting thunder snow. And for some reason, I must share the image that I have stuck in my mind since you mentioned Mark Sebastian on horseback. I've got that Anthony Weiner at the rehab clinic on horseback picture that everybody's seen on the Twitter.
I'm looking forward to I'm looking forward to an inappropriate tweet image coming out during the show from you forthwith, because I know you've been known to do that on occasion. An image or two slips out of your account if you're not following him at Russell Rhodes, or if it's appropriate, if it's safe for work, maybe we'll retweet it as well. All right, with the gang assembled, let's dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is indeed the portion of the program where we break down the week that was and indeed still is from a volatility trading and analysis and research and breaking trends and developments perspective. You never know what's going to break on the show. Of course, we had the FBI investigation reopening a couple of weeks ago, that injecting a lot of new blood, a lot of new volatility into the space dramatically throughout the course of the show. We've seen, of course, the last couple of weeks during the election night, of course, post-election, the week after, and now, of course, we're in this kind of week, I guess you can call it this post-election, not really a malaise, because we've been rallying pretty hard. The market's kind of settling off a little bit. Got to give a little bit back after these protracted rallies we've had post-election, giving a little bit back today. Most of the major indices off, about a 0.25% or so. Nothing major, certainly not enough to threaten the gains they've made in recent weeks here. And of course, even with this downside move in the market, we've seen a lot of upside in overall over the last week or two. So we've seen VIX cash heading to the downside, undershooting my crystal ball, just to forewarn. Looks like if we stay here, might be one of Mr. Rhodes' first victories. I'm not going to say ever, but in a long time, as the man who's been a degenerate vol buyer here pretty much since the beginning of the year. Him going low may have finally sealed the deal for him. We'll see. Of course, things have been known to happen as the show progresses, but still interesting time, right around 13.25 right now in the VIX cash as we're setting up. It seems like the Trumpocalypse, furor, euphoria, whatever side of the aisle you're on, seems to be settling out of the market again, as we're seeing both VIX itself fade a little bit, as well as the VVIX, which had spiked well over 100 back over the last couple of weeks. You know, VIX was rocking and rolling. VVIX, of course, our favorite indicator of how much VIX is moving. It is the volatility of volatility. I know a mind-numbing concept when you first approach it. It spiked as high as about 121 back right around heading into the election. So it's been pretty much ever gently trending downward ever since, hitting about 85, mid-80 range today. So a lot of interesting stuff in the works. Let's go in order of proximity back to that, what he refers to as the best little small town in America. I'll put words in his mouth. The Greasy Meatball, who's not on horseback, unfortunately. What's been catching your eye in this week of volatility, sir?
Well, just, the way the VIX has finally come off, the way VVIX, which had been really firm, is finally coming off. And we saw the VXN, the VIX of NASDAQ, get near 20 on this major selling. But now we're starting to see the last couple days, really starting kind of Wednesday afternoon, we're starting to see most of the major indexes kind of act like each other again. So, for instance, you've got the RUT marginally up, less than 0.1%. You've got the rest of the indexes down. Yesterday we saw all of them up. The day before we had seen them all of them up. So we're seeing the indexes start to correlate to each other again, which is something that had not happened. RVX got near 20. It was really stiff. Meanwhile, VIX vol is just dying. VIX, I think we might see a 12 today by the end of the day if things stay where they are. And VVIX, which was over 100 at the beginning of the week, is back down to 85, starting to get a level where you're going to start seeing people want to hedge using VIX options again. Anywhere below 90 is where I think VIX hedging using VIX options like back spreads works, when VVIX is below 90. When you've got that really, really high VVIX, some of those hedges don't work as well. The other piece is Amazon. Amazon's the big outlier today in terms of how much it's moving relative to all the other kind of quote unquote bang stocks. So that's the kind of thing I'm watching. The other piece is I'm attention to is bond vol. Bond vol through the roof because bonds are moving around. They're moving around a lot, and that is the other kind of major piece I'm watching.
Yeah, speaking of bond vol, I know, Russell, you've been watching a lot of stuff over there in your neck of the woods, and you wrote up an interesting piece this week. Good title, I like it. For the Trump presidency is scary. Why is the VIX so low? So maybe let's get into what you noticed for this week first, and then break down exactly what you were talking about there. Some interesting charts and graphs for our friends out there who like the visual component as well. We'll include this in the show notes. We'll put out a link. You can also find it over there on Russell's blog over there on the CBOE. So, Mr. Rhodes, take it away, sir.
Well, if Trump is so bad, that was the question that I got. Why is VIX doing what it's doing? Well, VIX is doing what it's doing for a couple of reasons. First off, we don't have anything going on until after Thanksgiving. We just really there's no known unknown such as the employment number that's 2 weeks from today, or the next Fed announcement, which is just under 4 weeks from today. And you can see in the SPX volatility, the at the money volatility for the different expirations that come after those two events. A little bit of a boost. You can also see a little bit of a boost in there for the Italian referendum, which is December 4th. But I think we're taking a rest and doing what VIX is doing. And like Mark said, I wouldn't be surprised if he is dead on with a 12 handle on VIX by the end of today, just because we're coming into cyclically what is a very quiet period for VIX. The thing that seems to really be getting a boost is, again, what Mark just mentioned, the bond volatility, which really went through the roof. Part of it's bonds cracking, but also, we've dealt with monetary policy forever, but we haven't dealt with fiscal policy, and that's because we've had, kind of I don't know if we've had a stalemate or nobody that's willing to get in there and shake things up as far as how the federal government operates, and that's what fiscal policy is. It's taxation and spending by the government, and there's a lot of uncertainty around that. And that uncertainty is going to bleed through to the bond market before it bleeds through to the equity market. And I think that's why bonds are doing what they're doing. But I also think that's why TY VIX, which is on average pretty low when you compare it to VIX, went up to fairly high levels. It was up to almost 40% in about a 4-day period from when Trump was announced the victor to its most recent peak. So I think if you're trying to find where the volatility is at, it's going to be in the fixed income market for the next couple of months, maybe more so than the equity market.
No, marking on bond vol, you just hit on TY VIX, obviously an interesting area. We don't touch on TY VIX perhaps as often as we should. Why don't you do me a favor, Russell, and give our listeners who are saying, what the F is TY VIX? Give them a quick overview of what the heck you're talking about.
Yeah, TYVIX. Sorry, we get lingo-y sometimes. We've got, of course, we make fun of this number, but we've got 29 volatility indexes. I think we're coming out with a 30th soon, so that we have a nice round number. One of them is and here's the official name, CBOE CBOT, 10-year U.S. Treasury Note Volatility Index. And the ticker for that is TYVIX. Uses the same old VIX calculation, but it actually, it actually uses the bond option prices from our friends across the street at the Chicago Board of Trade, which is owned by the Chicago Mercantile Exchange. So it's, it's a consistent 30-day measure of implied volatility for the fixed income market. And the most actively traded fixed income instrument is the U.S. bond market, and the 10-year is the most actively traded in that subcomponent. So it's a good indication of fear with respect to the direction of interest rates, or concern with respect to interest rates. The only one of the big differences with respect to TYVIX and VIX is TYVIX might climb if there's an expectation of higher rates, and also might climb if there's an expectation of lower rates. It doesn't necessarily have the same inverse relationship that you see between VIX and the S&P 500. Now, since we're in such a low interest rate environment, and a move up in rates would result in a move down in bond prices, they are moving in opposite directions right now. But if we were in a high interest rate environment and everybody was bracing for a cut, that might actually result in a higher TYVIX as well. So it's not quite the same as the relationship as you see between VIX and the S&P 500.
And just to clarify for our listeners, it's one of those indexes you guys disseminate. There's no options out there that they could sling, at least not yet. So if they're looking out there,
they're futures.
Yes, they are the futures indeed. We don't talk about futures on this show.
There are futures, but they are listed and quoted. The volume is fairly anemic there, but we do have futures based on TYVIX.
There you go. So you can get your hands on it in the futures form if you are indeed so inclined. Listening to this show, you're probably a wee bit familiar with volatility futures. Speaking of volatility futures, the answer to all questions, as we said a few weeks ago, the VIX futures term structure. Let's get to that a little bit again. VIX futures, been an interesting place to watch. VIX futures term structure, always an interesting place to watch. It's always evolving, sometimes head scratching, puzzling. We talked for a while there heading into the election about how just steep that gulf was between the cash and even the front month future, anywhere from 2.5 to 3.5 handles at one point. Then, of course, around the election time, we actually saw that evening out a wee bit, and now we're back into that relatively sizable gulf / chasm. Not quite as big as it has been, of course. VIX cash hovering right around, getting close to the 13 handle right now, so already starting to trend down a little bit, and the front month future right around 15, and the Jan future 2 months out about 1670 or so. So already you're talking about 3.5 handles away there. So you're starting to get a little bit of that discrepancy again. We'll see how, of course, all that unfolds. Always fun to watch the futures term structure unfold as much of a mystery as it sometimes is. But interesting stuff there, of course. Also interesting stuff in the options overall this week from an options perspective. We talked last week how last week was trending on, didn't quite make the list. It seemed like it was going to do it for a while there, but it wasn't historical from a volume perspective. As Russell pointed out, it didn't even crack the top 10, which it seemed like it was destined to do at one point. They didn't hit 1 million contracts every day except Friday last week, and this week not quite as robust, shall we say, from a volume perspective. Started off the week strong, still kind of feeling that post-Trump, euphoria movement, whatever, call it what you will. Things were really lighting it up. About 700, nearly 800,000 contracts on Monday, and pushing 1,950,000 on Tuesday, and then it kind of dropped off every other day this week. About 450 or so, 400. In fact, today on course, looks like today's on course for another sub-ADV day, right around probably 500,000 contracts or so. ADV, despite the recent spike we've seen in overall options volume, still under that 600,000 level. That was kind of the benchmark. That was kind of the barometer we watched for the better part of the last year. 600,000 ADV seemed like a reasonable level, and of course we saw in the weak volume period coming out of the late summer that we kind of broke through that to the downside, and it hasn't really recovered the last few weeks, notwithstanding, and it hasn't been super robust volume. We'll see if this kind of post-election cycle can continue, though. As we were just talking earlier in the show, it doesn't sound like there's a lot of drivers for vol in the imminent near future. That said, Mr. Rhodes, I know you spend a lot of time delving deep into all things VIX weekly options, even our much missed VX ST. But what was catching your eye over here this week in all things VIX weekly options, sir?
Where's my music?
Oh, you're right. I probably should do that, shouldn't I? Hold on one second.
Where's my? I don't talk without.
I've got you. You're such a prima donna now. If you don't get your intro, you don't talk. All right, hold on. 1 second, sir.
Now, Russell's Weekly Rundown.
There we go. That's a little better. We can't have to have a good chuckle before Russell starts our segment. Now, sir, if you've gotten your music and your bowl of M&Ms with the green ones plucked out, if you're ready to dispense some options activity, sir, have at it.
Well, there's actually something to talk about, and I think I'm getting ready to highlight a trade that was executed by Mark Sebastian, but in the weekly arena, it looks like somebody bought almost 10,000 yesterday. Almost bought 10,000 of the November 23rd 13 puts. Looks like they paid 20 cents for them, and if we get a settlement next week, Wednesday on the open. That is at 1280 or lower, those options, which are cash settle options, would actually pay off. And, it's not such a bad idea because you are taking a look at, you've got a holiday between this expiration. You're going into a fairly slow time. I know there are a couple of risk events, but people may be waiting till after the holiday weekend to set up trades around, 3 risk events: employment, the Italian referendum, and the FOMC. So that, I think that actually is kind of an interesting trade. There's a lot of activity in the 14 puts as well. That was done a little bit earlier, just a couple of weeks ago. It doesn't look like it was necessarily setting up for lower volatility. In fact, it looked like it might have been more sellers than buyers on those option contracts. Maybe I can't. Usually, I can try to get in the mind of a trader and come up with the ideas behind that. Not necessarily certain what they may have been thinking by selling those, but definitely the best trade that caught my eye with the weeklies is somebody buying 10,000 of those things yesterday.
Yeah, anything puts usually catches our eye, particularly in size, particularly in the weekly puts. If there's been a narrative over the past few weeks, certainly put action has clearly been one of them, unfolding in a lot of different ways. Straight up puts, some maybe more puzzling put sales, as you just outlined for us there, Russell, as well as, of course, the aforementioned 1x2. Speaking of 1x2s, Mark, I know that's been one of your go-to strategies for a while. How's all this put action out there treating you? What's catching your eye, if anything, out there in the VIX options? And is Russell correct? Was that you out there slinging some of those downside puts this week?
Well, quite honestly, I did buy some downside puts today. I did the 14-13 put spread expiring on Wednesday. But the things that I've seen, there have been some back spread buyers. We've seen a bunch of those trade, a lot of those cross. We've seen back and forth call selling. I've seen a big seller of the December 21 calls, and I've seen big buyers of the 20s and 22s. We also saw a large butterfly go up. They bought the 20, 25, or the 15, 20, 25 fly. That went up for size. In some of the weeklies, the biggest, we have seen a lot of downside activity on top of myself. Lots and lots of downside activity. I would note, though, that somebody came in and sold, I think, 10,000 of the December 14 puts. So it was 3,500. So not everybody is a believer that VIX is going to go a lot lower, but the trend is certainly your friend if you're playing VIX to continue to ease lower.
Mr. Rhodes, sir, I thought you had some thoughts on that, sir. Have at it.
Oh, I did, but I always wait for you to tell me it's okay.
You have my blessing, sir. Go forth.
I was just going to say, I like the 14-13 put spread that Mark talked about. I saw that one. I didn't realize that was him, or I would have beaten him to the punch and talked about it. Yeah, he just did mention selling some of the Decembers. Those are the standard December contracts, right, Mark?
Yes.
Yeah. See, I can see doing that because those come after. Again, I think the risk events, and I've been a blogging machine lately. I think the risk events that we've got between now and the end of the year all come between Thanksgiving and Christmas. And we've got what I would consider a relatively late December expiration here. So I could see selling some put for December 21st expiration, not intending on holding them through expiration, but being prepared to try and cover those things if we get any kind of spike in volatility at all. And you got to think with the handful of events that we've got on the horizon, you probably would have a chance to trade out of those between now and the December expiration.
I would be a bit. What do you? I would be a big proponent of like some sort of DEIS 14, DEIS regular put calendar. I think that there is a lot to be made there. Even though the Fed is now pricing itself at about 100% raise in December. We could see a little bit of an increase in volatility, not on the raise itself, but on what is their outlook going to look like? Are they going to dramatically change how much they're going to raise rates in 2017? That could cause VIX to at least not stay below 13, and could get it above. Going into that settle, because I think the announcement is that afternoon, isn't it? December 14th, Russell. So I mean, I would have trouble imagining.
It is.
Yeah, I would have trouble imagining VIX below 14 with that announcement up and coming. So an interesting trade would be to sell the DEIS 14 weekly 14 puts, and buy the December behind it, playing the timing as kind of a timing trade.
The crush.
Yeah, I think that there is absolutely a trade there.
Well, someone's liking at least one leg of that trade here. Going the other way, though, I'm looking right now. Someone putting up buying about 500 of the DEIS 14 puts. So expiring on the 14th, 14 puts, putting those up for 50 cents. Ton going up on the regular DEIS on the 14 side. That the regular DEIS does a fair amount, 150,000 contracts open on that strike. Speaking of what's open, let's get to it with our hot VIX strikes for this week. The top 10 names, top 10 open interest positions. See what people actually have been trading out there. And as we know, coming off of last week, the open interest fallen off a wee bit, so these numbers are going to be a little bit smaller than they typically are. Let's dive in. Number one on our list for this week, our top 10 for this week, are the DEIS 25s with about 215,000 contracts open there. Number two falls off a little bit with the DEIS 30s. Again, the 30s, doesn't matter how low we go in VIX, doesn't matter how low the futures go, the cash, doesn't matter. Someone, this 30 strike is A, going to be on this list every week, and B, someone's going to be putting some size into it. Even though it looks like someone closed a little bit this week, it's off about 8,000 contracts from last week. So maybe someone taking a little bit less of the shine off the rose there of the DEIS 30. But that isn't enough. Right behind it, following hot on its heels, the Jan 30s with 142,000. There needs to be a study done, Russell. Maybe this is a good. You don't have enough ideas for papers over there, but just what is the magnetism of that 30 strike? Why do people flock to it in so many ways? Obviously, parts of it are different spread legs. We know some of those 1x2s like to go up with the second leg being on the 30 strike, but still, every week, it's like clockwork. The 30 strike is up there. Number four, the DEIS 21s, 130,000, so we're dropping off quite a bit already as well. Number five, the DEIS 24s, 128,000. Number six, the DEIS 22s, are pretty much a DEIS call strip here, 125 as well. Number seven, the DEIS 27s, 118,000. Got to go all the way down to number eight to get our first put on the list. It's actually the aforementioned DEIS 14 puts with about 112,000 going in to this right up from this morning. Obviously, open interest changed a little bit since then. In terms of that, about 112,000, and right on his heels, almost 112,000 with the DEIS 20 calls, and then rounding out our top 10 list, our second put on the list, number 10, The D's 16 puts, so all in the regular D's, no weeklies lighting it up there. 110,000 there. Total of about 3.8 million contracts outstanding, so pretty much close to half of what it was not too long ago. About 2.8 million on the calls and about a little over about 1.08 million on the puts overall. Anything else catching your guys' eyes before we roll on into some individual names? Anything VIX options or VIX related, Mark or Mr. Corner Office? Now is the time, sirs. The floor is yours.
Got nothing. I think.
I think your silence, your resounding silence as a no, as we keep on rolling into, of course, it is still, we forget about it with all these macro events going on, but it is still earnings season. There are some events and some names popping off, including we saw just last night, we saw Salesforce reporting, of course, ticker symbol CRM. I like that. They were closing about 75.25 going in to their announcement, and today they're at 78.25, so up about $3. Right around 4%. They were actually pricing in about a $4.50 move, so about 6%. So if you're a hardcore premium buyer out there, you might be a wee bit disappointed, even though intraday they were feeling a lot more love. They got up to about 80, not quite 80 and a half, but close to it, so about 80.37 or so. So you did see a decent enough pop if you were patient and planned it well. You could have gamma scalped or gotten out of your position and probably broken even at the very least. So we'll see. We also have some other names coming out earlier this week, including good old Walmart. They're leading into their big hot season. Black Friday, of course, the holiday season kicking it off for all the retailers. And they were taking it on the chin. They're at 68.62 today. They had earnings a few sessions back. They took it on the chin. Since then, they closed right around 71.40 or so going into their earnings. And Street obviously not liking what they're seeing because, again, easy for me to say, cutting their legs out from under them down to about 68 and vacillating around that same range. Today, same thing with good old Best Buy. They were coming in at coming into their earnings, actually feeling a little bit of love. You know, it's funny. We've seen the death knell sounded for brick and mortar retail, particularly on the electronic side, for so long. Everyone was kind of waiting for Best Buy to kind of go the way of the dodo, follow on the heels of Circuit City and CompUSA and all these other kind of big box retail names that have been tried to sell electronics and just getting squeezed to death by outlets like Amazon and things like that. And lo and behold, Best Buy knocking it out of the park, closing right around 40 and a half. And opening up the next day, just bally-ho, got up about nearly 47, and trading today off about $1.25, so about 44.73 out there. But still, maybe one of the surprises of the season so far is that Best Buy, I hear different stories. VR is accreting to that. People are coming in to shop VR headsets, and you kind of got to do that in person. You're hearing a bunch of other things. You know, they kind of retooled those stores a little bit, but clearly, maybe Best Buy is the story of the season. I know, Russell, you watch a lot of independent, or excuse me, I should say, single names going into earnings season. Any of these catching your eye, or you've been so focused on macro and TY-VIX that you ain't got time for these here earnings?
I have time for earnings, and I'm always a big fan of retail earnings. Best Buy is the funniest stock ever. It keeps getting written off as being dead, and then they surprise everybody. And it is not just being Amazon's showroom. So that's the one that always seems to give me a little bit of a surprise is Best Buy, and I've almost given up on trying to keep up with or guess what the stock's going to do. But it always does have an awful lot of movement around earnings. What I was hoping to hear, and we didn't get a lot of out of the retail earnings, I was hoping to hear this is what we think is going to happen with Christmas, and I wanted to hear some Trump excuses. And we didn't get any Trump excuse, like, well, there's so much uncertainty. I have no idea what's going to happen around Christmas. And we didn't get those. And usually this earnings period is when we get a little bit of insight into what the retailers think is going to happen over the holiday season.
Yeah, that's true. That is one of the best things about earnings season is that you just see the litany of excuses that are brought out and that people will glom onto. I think my favorite is still you guys, the SIBO from a few quarters back, I believe, maybe a year or so back, when you actually had the temerity to try to explain to analysts the impact of the VIX futures term structure. Again, the answer to all things. I wish I could have been on that conference call to hear what the analysts and reporters had to say about that, because I could imagine a lot of eyes just rolled back in their heads as, what the heck are they talking about? Let's move on to another area that's been spicing it up lately. And in terms of movement and vol coming off a little bit, but still doing fairly well as well. This is, of course, commodity vol. If you like commodity volatility, stay tuned. 3 o'clock Central, 4 p.m. Eastern here on the network, listeners, where we do our weekly TWIFO, This Week in Futures Options. You could tune in, kick the tires. We talk all things crude, gold, soybeans. Got some surprise products in the work for you this week as well. Some crazy trades, all kinds of fun stuff. This Week in Futures Options, 3 p.m. Central. If you can join us live via Mixlr. If not, just search for This Week in Futures Options wherever you find our favorite programs, or your favorite programs of ours, I should say, as well as, of course, just get our network feed. You get it all, and makes it a lot easier for you. And of course, looking at all things crude, we like to look at the crude VIXs, VIXI, VIX plural, out there, and OIV and OVX being the two chief proponents out there. OIV being, of course, the VIX of WTI, OVX being the VIX of USO. And both of them, they tend to move in lockstep fairly well, and both of them kind of spiking earlier this week around the 16th when we had a bit of a downward move, shall we say, in all things crude. Spiked as high as 53. That's a pretty fairly high. That's a high pretty much going back at least a few months here. And then, of course, coming off on the tail end as the later portion of the week as cooler heads prevailed, hovering right around 46, 47 out there right now. Of course, if you've been following OIV, OVX, you know that's fairly elevated compared to what it has been just a month or two ago when it was hovering in the mid to low 30s, which is kind of a lower bound of where it's been over the past year or so. Certainly it's nothing compared to the upper bound we saw back in, I think, in the early mid-February period where it spiked up to somewhere in the mid 80s. So we're kind of in the middle of that range right now to the lower end. And of course, we saw crude prices dropping earlier this week as well, dropping to a 3-month low. That was because, of course, of all these reports of OPEC still having issues cementing this cut on all things oil production out there, and that's been weighing on crude for quite some time. We got up into the 50 handle in WTI, then kind of gave it all back, and we still have seen, and we continue to see, protracted bids to the puts going out 3 months, 6 months, a year. So people still have structural long-term concerns in that marketplace. Again, if you want to dive into all things in the skew out there, come back for TWIFO in a little bit, where we do a lot of that on that program. That said, Mark, I know you like to watch USO mostly, but anything catching your eye out there in crude vol? Does Carmen Line ever play around in any of the crude products, or are you strictly VIX options and futures these days?
Generally, we stick to VIX options and futures, but we'll look at crude and we certainly do an option pit. Crude vol's been moving around. Yesterday, as slow as things were, crude broke 2 million contracts for the first time ever. So oil is moving around. Gold is moving around. Bonds are moving around. The only boring thing is the equity market right now.
That's awesome. I love that.
There you go. That's maybe one of our pull quotes for the show. The only boring thing right now is the equity market. There you go. Another reason for you to come and tune in to TWIFO in a little bit. But speaking of you guys tuning in, you guys like to send us a lot of great questions and comments. So let's get to them with our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. Welcome to the volatility voicemail section. Like the man said, this is the portion of the show where you guys get to take the reins with your questions, your comments, your insights, not just for us, but for your fellow listeners here. Really quickly, let's run this down. We asked you guys at the beginning of the week, our question of the week was, the Tesla was lighting it up to the downside, vol spiking out there, and it was actually active. They were pricing in fairly, but not, I guess, in terms of Tesla, perhaps not as meaty as certainly we be some other names, but they're pricing in a fairly beefy, about $8 and some change move through the end of the week. About 4.5% is what they were pricing in. We asked you guys at the beginning of the week, we said, what do you guys think about that? Is that too rich for your blood? You think it's overpriced, underpriced? We gave you the choices of inline, beat the straddle, less than the straddle, or you just sick to death of Musk and Tesla and everything. And as of right now, 35% saying beat the straddle, it was at 182.5 when we posted that. It's at 186.43 right now, so about a $4 move with a few hours left to go. Of course, it spiked today, got up to about 190. So if we get 190.5 actually. So if you look at it that way, then actually it did. Actually, no, excuse me, the high was 193 today. So it had quite the range today. So in which case, when you look at that, then our friends on that side of the fence are actually winning, beat the straddle. So we never explained if we had to be closed there or if it's intraday. So we'll give you points for both. In which case, a beat the straddle clearly it can be all right. But also, if you're going the strict letter of the law, then less than the straddle could also win. 35%. Pick and beat the straddle right now, 26% saying less than the straddle, about 19% saying you're somewhere in line, and about 20%, similar amount, saying you're just sick to death. Of all things, Tesla and Musk, and hey, I can't blame you. But that said, it still is interesting to watch what you guys are thinking. Speaking to you guys, let's move on to some of your questions. This is a good one for you, Russell. I know you guys have been doing some stuff in this area. This comes from Alex Devers, or Devers, perhaps. He asks, what does the future hold in terms of social media sentiment and volatility? Is there a social volatility index out there already? If not, is this something the folks at CBOE are cooking up? Well, like I said, Mr. Rhodes, this is probably right up your alley, or at least up to CBOE's alley. I know you guys announced your partnership, what was it, a few months ago with, I believe it was Social Media Analytics, to start disseminating some indices. If my memory is correct, there were no volatility indices in that first wave. There was just kind of more just straight up sentiment, or straight up social media kind of things. But I would imagine, given the partnership with you guys and your history, that a volatility index may not be far behind, or perhaps you guys already have one in the works. What is up for you guys and your social media sentiment and volatility, sir?
Well, we do have a handful of SMA indexes. The first one was the SMA Large Cap Index, which basically takes the stocks that have the most positive sentiment every morning and tracks how they do from that day's open to that day's close. And it's kind of an interesting short-term momentum indicator. We've added a couple of indexes since then, and I do think, because I talk to the guys over at SMA an awful lot, I do think there is work being done on something that will track the attitude toward market volatility relative to what's going on with market volatility at some point in the future. We don't have it out quite yet, but we will have it out at some point in the future. As we speak, I am going to actually tweet out a link that shows you how to find out more information about the SMA indexes that we have over here. And whenever I get a question like this, I do write it in my notebook, and when I do my walkabout at CBOE and go visit other departments, I will mention to the guys in research that somebody was asking about this. Sometimes that'll get a spark to get something going with respect to new products. I can tell you for a fact, and it's a little bit of a different area, but constant requests from individuals for RUT options being PM settled, at least the non-third Friday ones being PM settled, really did push them in that direction. So we do listen to questions like this, and your questions do make a difference. It just sometimes just takes a little while.
There you go, Alex. Ask, and perhaps you shall receive at some non-committal, non-determined upcoming day. But it's good. Good to know your questions are being heard, not just by us, by the people who actually make the products. That said, really quickly, Mark, you're out there managing money on a daily basis in the volatility space. We hear a lot of talk about, the impact of Twitter, the impact of social media. We see people, rumors and some actual trades of people going off, firing, moving big deltas based solely on one tweet they got ahead of time from, let's say, the AP or something like that. It seems like an interesting, shall we say, sometimes dubious area to be slinging a lot of deltas on. But that said, What are your thoughts on this space and its impact as an indicator? I mean, right now, for you, are you using any of this stuff? I kind of have a feeling I know how you're going to answer this as an old school options guy. You probably lean the same way I do. But that said, what are your thoughts on this and maybe its future utility for you?
I think there's more value in looking at social media. I use social media to find things to trade, not as an indicator to trade. So like dry ships was all over Twitter, and that thing has been the short squeeze capital of the country the last couple of days. In terms of actually volatility, I mean, if you look at 90% of social media, it takes over it's in stock discussions. It is 10 stocks that account for 90% of the tweets, right? It's SPY, VIX, Apple, Google, Netflix, Facebook, and then, maybe Microsoft, maybe JP Morgan, Goldman, and then, rotating 2 or 3 other stocks. But, I'm not so sure that that a volatility index developed off of social media. I mean, it's probably would be about effective as like the put call ratio parity, where, you would use it as kind of a counter indicator, not an actual indicator.
Yeah, I think that could be. I think the volatility of that index could also be extremely high because you're right. Some names are going to explode onto the radar one day, then they're gone the next. So huge volatility of that index. But that said, it's kind of interesting. And I'm kind of with you on that front. I still see the value, at least for me, from a social media perspective. Of course, obviously searching ideas and things like that. But in an aggregate sense, it's more just the straight volume. There's a ton of volume on something. Something is afoot. We treat it like a scanner, like anything else we do for scanning for unusual activity. It's a flag. Hey, a lot of people are tweeting about this. Maybe we should dig into it. But we don't go much farther than that, just because. And we get hit up all the time, as you might imagine, here on the network. People who claim to have the secret sauce. They've cracked it because it's a machine learning problem at the end of the day. How do you parse all these tweets, get them down to some sort of manageable area, and then have a machine be able to read the intent, the actual intent? If you just put Apple in a tweet, how do you know what the hell that guy's actually talking about? Does he like it? Does he want to buy an iPad? Does he hate it? Is he not even talking about Apple, the stock? There's a lot of machine learning that goes on behind that. And we talked to a few of them, maybe a few on the network, a few more on the network. We've had a few already, and see what they have to say. But it's an interesting area of research. I know, Russell, that's what you guys are working on over there. So if you have any last thoughts on this topic before we jump off, have at it. So I know our listener here, Alex, will probably be excited. He's getting so much love here.
Well, the nice thing about SMA's methodology is they only monitor about 3,000 Twitter accounts. And they actually have people that they have identified as influencers or people that and you know what, the three of us actually I think qualify for that, where different people that have been around for some time and have opinions that people actually respect. If you start following each other and are listening to each other, that actually qualifies you with respect to being, in a very general sense, with respect to being one of their as I just put it, influencers. So they actually have done a lot of work that involves in getting that noise out of there, and then being able to nail down what might be positive or negative by parsing the words. On the other extreme of that, I know a lot of social media analytics was done around the most recent election, and one of the problems with trying to do that is you would, you'd get a hashtag that says, I'm with her. And then it would be something god awful about Hillary Clinton. So it was very difficult to figure out the election because people were tricking you into reading their tweets, even though it was negative as opposed to being positive. The SMA guys have done a lot of work where they try to scan those things out.
Yeah, it seems to be the first step I hear from all these people who are playing in that space is you take the wide world of Twitter accounts, how many hundreds of millions, and you slash away 99.8% of them to narrow down on some universe. So the notion that there is a lot of noise out there, and they recognize that, and they get rid of the lion's share of it off the bat. By the way, Combat Bob chiming in here saying, yeah, there is a social media sentiment poll already. It's called the CNN poll, if you trust it. So there you go. Getting political already here on the show. You can't escape it. Let's move on here. Question from Avec. He or perhaps she. Interesting question, actually. They ask, has anyone studied the effect of selling weekly options versus monthly options, including, they put in all caps, including commissions. It seems like that would be a big factor when writing so many contracts. And you're right, Avec, it is a big factor. And there has been a lot of data on this, and I'm sure, Russell, you probably have some thoughts on this as well. There's been a ton. I mean, we were joking coming out of RMC that the narrative of perhaps if you had to write this year in total in terms of volatility, developments, research, whatever narratives, selling puts becoming the sexy thing again is leading the charge. It's just about every study I've seen this year has somehow come out and advocating in behalf of selling puts, cash secured or otherwise, and 99% of those studies have then gone on to compare weeklies versus monthlies and shown the benefits therein. But there's obviously where the rubber meets the road is the details there. And if you're writing 4 contracts a month versus 1, it's going to cost you more to do it. You're going to get less per one, but in aggregate over time, the goal is, of course, you can make that up. And a lot of the studies have confirmed that. But I think he's right. A lot of the studies, A, don't include commissions, and B, there are some other nuances in there because, of course, you're shorting a hell of a lot of gamma at that point. So the drawdowns could be an issue sometimes, and you have to sometimes disassociate total premium harvested, which could be more and should be more, all things considered. A, also commissions, but B, also your total returns on that strategy over the year. If you're getting knocked out of the park every 8 to 10 weeks because of some crazy drawdown, then guess what? That return isn't going to overall be as good, even though you're harvesting more premium versus selling a monthly. I think some of the studies out there have borne that out as well. I'll have to go check. And Russell, like I said, you go to all these conferences, you talk to a lot of the researchers out there. In your mind, and maybe some of the SIBO ones do this that I'm not aware of, are there any studies out there that are doing this analysis and also include the commissions that you know of?
Not necessarily including commissions, but there is some. You can take some of the indexes that we've put together that use the weekly options, and you could extrapolate some of the performance by comparing the weekly options with the performance of some of the monthly indexes that do some of the same things. Something that I'm actually working on, and I'm waiting until we've got a year's worth of data. I'm actually looking at doing Monday, Wednesday, Friday sales against longer dated options. And I've been tracking it on a pretty consistent basis, where you basically maybe buy a deep in the money put or call that has less than $10 worth of time value left, and then every afternoon, the day before any expiration, you go down one strike and sell the put. And take advantage of that one-day time decay and how something like that works for you. If I do something like that, I tend to include or subtract what I think would be a reasonable commission against all of the different trades that I do, just to get a little bit more realistic. And typically that's maybe $10 or something like that related to the option contract. I always try to, whenever I test anything, and Mark and I have done some of this kind of work together, I always try to err to the cost of trading against the performance that I display.
Mark, really quickly here before we have to wrap up, what are your thoughts here for Mr. or Mrs. Avec? And your thoughts in general? You do this all the time. You're writing weeklies, as we just talked about, versus monthlies. What do you think over time that impact of commissions? Is it negligible? You think it's dramatic, or do you think other things like maybe drawdowns will have, and just the net gamma effect will have more of an impact than things like commissions over time?
I think it depends on the strategy and exactly what you're doing. For starters, with commission, I never think about commission. And if you're thinking about commission, then your commissions are too high and you're paying someone way too much. So generally speaking, I've never been involved in an effective strategy where commissions would have tipped one against the other. My feeling about weeklies versus monthlies is, weekly trading is much more nuanced. You have to have some nuances to a strategy. The nice thing about monthlies is, stocks can go up and down and move around, and you might not face some of those drawdowns. But my understanding is, generally speaking, from a risk-adjusted standpoint, getting more of those sales, the more occurrences we can get of selling options. When really selling options is a game of attrition. And how many sales can you get in before you get that nasty move? Weekly should weekly should, if the strategy is effective, provide a some improvement on risk-adjusted return. If what you're doing is not, or if on a personal level you are not, then you should probably not be trading weekly options.
They are indeed a nuanced instrument. Speaking of nuance, before we wrap up here, if you're not following Russell on Twitter, you should be, as well as all of us, at Options, at Option Pit, as well as at Russell Rhodes. He just tweeted out, as I knew he would, a great little Photoshop of the greasy meatball riding a horse. In spite of the obvious fakery of the head here, Russell, Trading Volatility saying, looks like a fake horse to me. So he's taking umbrage not with the Photoshop of the head, but the horse. So there you go. So your Photoshop skills being roundly mocked here. As we move on into our final segment, it's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we all embarrass ourselves repeatedly over the course of week in and week out, just for your own amusement. That's how much we love you guys. We're willing to do this every week for your listening pleasure. And this is, of course, a portion of the show where we attempt to prognosticate the ever whimsical, the ever sometimes head-scratching of VIX cash, where it's going to be this time at the end of the show. Last week, we were feeling a bunch of different ranges. Mark was feeling pretty aggressive to the downside. It was hovering right around about a 15 or so level, I believe, a little bit higher, I think, this time last week, maybe around 15.5 or so. Mark was feeling pretty aggressive to the downside, about 12. Russell, in a first for him, I believe, was feeling a little bit of downside as well. Not as much, around 13.5. And that seems like that may be the winner chicken dinner. We'll see. And I was feeling a little bit less downside to the tune of about 15. As we're looking right now, it's right around the 13 handle, about 13.12. So Russell, you get the pride of place for this week. I'll have to look it up. You were supposed to keep track of these things, and but I do believe that is that your first victory, sir? In which case, congratulations.
No, I think I won one other time when I guessed as Mark Sebastian and gave him like an 8 or something like that. So I think this is my second victory.
The ghost of Mark has done quite well.
I know. I've actually got a classroom of people that are waiting for me that I've got to go speak to. So I'm going to guess and then move on. I'm going to go with 14 even. I think because you guys reminded me that next Friday is Black Friday, I think there might be some concerns going into the holiday season. So I'm going to go with 14.
And really quick before you go, sir, what is coming down the pike in SIBO and SIBO Live Vol land?
Nothing terribly exciting for the next couple of weeks. It's Risk Management Asia. So a handful of us are getting on the plane and going to the other side of the world. Gonna get out of town just before the snow hits Chicago, which I think is just great. And we'll definitely, when I'm back with you guys in a couple of Fridays, we'll spend a lot of time talking about the good stuff from RMC.
Yeah, I'm looking forward to that in a couple of weeks. Go forth and educate those folks on all things volatility now, sir. And Mr. Greasy Meatball, you were second closest. You get to go next. What are you feeling for next week, sir?
Are we doing next Friday or the Friday after that?
Next Friday, even though we won't be here. We're going to do next Friday.
All right, I'm going to go with, let's see, we'll be coming back from Thanksgiving. I'm going to go 12.25.
This is why I hate going last, because someone always jumps on my spot. So I want to give you a little more room to the downside. I was going to go right around that level. Going 12 would not be fun for you, so I'll just make it. I'll go a little bit less. I'll give you a nice half a point to the downside. I'll say 11.75. There you go. I don't think it's going to go that low, but Russell's got 14. I don't think we're going to be here. Certainly on a Friday after a long holiday, closed day, short day the day before. I don't see a lot of drivers of huge volatility that day, but we shall see. We've been surprised before. All right, listeners, that music means we have come to the end of another glorious adventure in the world of volatility. We started off, as we are wont to do, talking all things post-Trumpocalypse, post-election. VIX cash dripping down, a bit of a disparity widening up again in the VIX futures. VVIX coming off its recent highs, even tossing a little TY VIX, which is something we don't do very often. Getting into some light end of the week volume for VIX options, even though it started off heavy. And some put paloozas in the weekly options. Kind of interesting. Talking also some earnings and some oil vol and as well as a lot of your great questions. Great questions about commissions and also social volatility. Good stuff this week. Keep bringing the heat every week. That's why we like you guys. And before we go, Mr. Greasy Meatball, what is coming down the pike in the land of all things option pit, sir?
Stay tuned next week. We'll be doing some fun Black Friday and a Cyber Monday sale. So pay attention to your email. And if you're not a subscriber, change that so that you can get some of our awesome special deals.
There you go. You guys always do have a deal or two on Black Friday. So yeah, if you're not a subscriber, head on over to optionpit.com. Sign up for their newsletter so you can get those deals forthwith as soon as they are available to you, and you can get some deals on maybe their weekly classes, their weekly webinars. You always get a deal on this show because it's free, but all the other stuff they do over there. Check them out, optionpit.com. Mr. Rhodes had to go. Check them out over there, as well as our friends over there at livevol.com. They've been hitting at a lot of cool stuff coming down the pike any day now, so hopefully we'll get a chance to check that out. You can check it out in the meantime completely for free. You don't have to wait for that. Livevol.com. Click that green button there. Get the free trial, and that's it. That's all you got to do. It's pretty easy, and you get all this stuff we're using here throughout the show, all show long. Pretty much every show we do here, we use that data set and that platform. So check it out for yourself. Get it for free. See what we're talking about here, and hopefully we'll get some new updates on all the cool stuff they have come down the road in a little bit from our friends over there at LiveVol. On behalf of the Greasy Meatball and Mr. Corner Office and indeed myself, reminder, no show next Friday. It's Black Friday. We're not going to do a show then. You guys got to go out and shop. So we'll let you do that. But we'll see you in 2 weeks for more Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. Or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.